Good afternoon, and thanks for joining us for today's webinar, Your Business Evolved, but Has Your ERP? I'm Brett Bauer, a partner at McKonly and Asbury, and joining me today is Dan Dorgan, a manager within the firm, as well as Pat Bostick, a solutions strategist, and Katie Graham, ERP sales consultant from Cargas. If you're not familiar with us, McKonly and Asbury is an accounting and business advisory firm with offices in Camp Hill, Lancaster, Bloomsburg, and Philadelphia, Pennsylvania. We offer a wide range of services to organizations in various industries. If you're interested in learning more about our firm, please visit our website. If you've joined us for past webinars, welcome back. If you haven't, our monthly webinar series features various business topics to keep you updated on what's going on around us. Be sure to check out our website to catch past presentations, as well as current information through our blog. Here's today's agenda for our presentation. We're going to start out, Dan's going to take a look at the current accounting standards around software costs. Next, I'll talk some about the changes that the FASB is considering on the topic of how to account for software costs. And then finally, we're going to devote most of our time to this last section where our friends from Cargas will cover AI automation and the future of ERPs. If you have any questions for us during today's presentation, please go ahead and submit them through the built-in questions function in the webinar control panel, and we'll do our best to answer them during or after the webinar. For those of you who are looking to obtain CPE credit for today's webinar, please keep in mind that there will be 4 polling questions throughout today's presentation. The first has popped up on your screen, and you must answer all 4 of those questions to get your certificate via email within a month after the webinar. In order for attendees to be eligible, you must answer via the polling submission. We're unable to accept late responses. So we'll give a couple seconds here yet for people to respond to that first polling question. Do you wish to receive CPE for attending today's webinar? All right, we have 96% saying yes. I'm always impressed with those who are attending, not for CPE purposes, just for the love of the topic. Great. So Dan, can you go ahead and get us started on current GAAP?
Absolutely. Thanks so much, Brett. Yeah, so let's talk about current GAAP and what FASB has to say just about our ERP journey. What are the rules, what are the guidelines surrounding these costs of internal use software that kind of go into building our ERPs. So the FASB has outlined this at ASC 350-40. This really only surrounds internal use software. Software available for sale is covered elsewhere in the guidance. ASC 350-40 breaks down your ERP journey into 3 phases here: the preliminary project phase, the application development phase, and then your post-implementation phase. Going ahead to the next slide here, I wanted to take a closer look here at what's involved with these phases. What can we go ahead and capitalize versus what gets expensed directly to the P&L. So if we look at the first phase here, it's our preliminary project phase. This is where you're defining what you want out of your ERP or internal use software. You're planning out, how long is this going to take? What's the capital requirements? Do we have a budget in place for this? At this stage in the game, you might be looking at vendors and seeing, who's the best fit, for this project. At this point, with the current guidance, FASB would say, hey, you're not truly building an asset quite yet. Go ahead and expense this to the P&L. As we move forward in the project, you'll look and see we're at the application development phase. In this phase, we're really designing your coding, testing. Eventually, you're going to get to the installation and integration into your business with this software. At this stage, it's all about building this software, and at this point, you can start capitalizing these costs that you're incurring. Once you've rolled out your ERP or internal use software, we move into the post-implementation phase. This is really all about training, maintenance. Maybe you have some bugs or patches that need to get fixed. But at this point, you know, your ERP or your software is fully rolled out, and it's just about maintaining the software that you have. At this point, all of this would end up being expensed, as it does not relate to the building, obviously, of your software here. The one thing I would like to point out, in this post-implementation phase, you might find that, hey, I need you know, some new functionality, or maybe there's a big improvement that you're making to an existing system. If you find yourself kind of in that boat, the designing, the coding, the testing, installation, and integration of those items would end up being capitalized as you're building essentially a new ERP or new software. Important to note, it has to be significant. It has to be a major improvement to what you currently have in place. Brett, do you have any thoughts or ideas about the current phase situation that FASB has blessed us with?
That they've blessed us with. We'll get soon to the changes and why they're making changes, but I think just even hearing you explain these phases brings back a lot of conversations I've had over the years with different clients as they go through large software projects, mostly ERPs, and just the challenges they have as the progression is not typically linear, where it's a clean cutoff from preliminary project then to application development, and then cut off again to post-implementation. Just the way that software is developed these days, it's a lot more agile. It's a lot more back and forth going between the phases. So we'll get to that in a few slides, but I've seen firsthand where this causes a number of issues for clients trying their best to understand ASC 350.
No, I totally agree. And if we go to our next tab, I think we are going to talk about some of these challenges that you and I have seen. Just my first point here talks about labor costs. Obviously, you're going to have several people probably working on this project internally. While you can indeed capitalize on some of these labor costs, I think there's a lot of challenges, right, that goes into, all right, well, we had, 10, 15, 20 people working on this at various points in the year, but when did their time really go in to that application development process? When did they stop the application development process and maybe go into the post-implementation? Or when did we go from our preliminary project phase into the application development phase? From an audit perspective, I always preach that documentation is just paramount, especially when it comes to this. Being able to say, this is the time that was truly spent on building our internal use software versus, hey, this was really, some bugs and patches and things of that nature that really didn't go in and get capitalized. Along those same lines, interest costs, ASC 350 does state that, the costs associated with the application development does get capitalized. ASC 835-20 goes into this a little further and talks about, can you recognize or can you capitalize these interest costs that you've incurred in that application development process? And the answer is yes, as long as, those interest costs incurred directly related to the software development. I know we've seen a handful of times you maybe won't have specified borrowings, directly for your software or your ERP. It might be commingled in a line of credit. or just general borrowings. When this occurs, FASB would recommend using a weighted average rate. How much of your line of credit or your general purpose loans went into the application development piece of it, and from there you can kind of determine, okay, well, really the interest incurred should have been this based on the weighting of the funds borrowed.
Yeah, Dan, going back to your topic on labor costs, just brings back some other real life examples that you and I have run into with clients. One of the challenges is even when we go in and we'll test what has been capitalized in terms of labor costs, we'll see a lot of times third-party invoices from their consultants, right? Typically, they'll just grab those invoices, capitalize the whole invoice, and then we go through line by line and try to understand, all right, based on what the invoice says, which phase are we talking about? Is this prelim? Is this the application phase? As that can differentiate what is capitalized versus what is expensed. And what I've seen a lot of clients miss too is they might be capitalizing those third party, those external consultant labor costs, but they'll miss the internal labor costs if they have dedicated personnel internally to that project. That's something they need to be aware of as well.
Yeah, absolutely, Brett. No, that's such a great point. And yeah, it kind of goes back to your original point of it not being a fully linear process. We're kind of, shifting between, these three phases and trying to discern, what bucket, are these costs really belonging to? Okay. All right. Do we want to kick off our next polling question? So yeah, I'd be really interested to hear from the group. What is the next big software spend that you have coming up? Katie, Pat, any thoughts on what we might see here?
Well, depending on the industry that the company is in, I mean, any of these could be a big software spend. The other might be, that might not be on here, might be maybe looking to upgrade what you currently have, not to a new, but maybe to the latest version of the current author software. And that might include moving from being hosted to maybe being fully in the cloud. So just another thing that could be a software spend.
Yeah, I think going off of Pat stating about going from on-prem to into the cloud, I think that's one of the biggest drivers that we're seeing right now is a lot of companies are on legacy systems, and because of end of life, they're moving forward with, hey, what other options are there?
Gotcha.
Yeah.
Awesome. So definitely some interesting results here. A lot of other ERP. Yeah, this is great. Awesome. Well, Brett, I'll pass it back off to you so you can talk about future gap.
Yeah, thanks, Dan. So again, Dan, so far we've been looking at what GAP currently says, what the current accounting rules are around software costs. I'm going to look ahead to where we're going, as the FASB has been kicking this around for a few years now and want to make some updates. So like I said, the FASB, they're the standard setters within the accounting industry. They've been working on a project called Accounting for and Disclosure of Software Costs, dating back to December 2021. So 3.5 years ago, they started looking into this. And you might ask, why change? Well, we kind of started getting into this a little bit, but over the years, they've been getting more and more complaints about how GAAP is currently handling accounting for software costs. And there are several reasons. I listed a few here. The first reason there is that the guidance is confusing, right? Companies aren't sure which phase they're in, and ultimately then which costs should be expensed versus capitalized. And so as a result, there's been inconsistent application of the standards. Another reason for this change is to modernize the standards, to bring them more in line with where we're at today here in 2025 in terms of the software environment. And there are a couple things to modernize. First, we've been talking about this linear progression, which is kind of antiquated back when this was originally written, ASC 350. Software was developed a little bit more linearly than it is today, which is more an agile approach to software development. The second piece to modernize, which again we kind of tiptoed around so far, is on-premise licenses not being quite as popular as they were years ago, again when ASC 350 was first written. Now there's a lot more cloud computing that has really picked up, and so software has evolved. How we develop software, that has evolved. And the FASB decided that it's time for the accounting for software costs to evolve as well. And then the last reason the FASB noted for why they want to update the standards is to ultimately enhance transparency for the users of the financial statements. And that's specifically around a company's cash flows relating to software costs. So where do we stand today? What's the status? The FASB, again, they're ultimately responsible for issuing changes to the accounting standards. They did issue a proposed accounting standards update, ASU. So that's like a draft version of the new standard. They did this back in October 2024. After that, the public was able to submit comment letters. Having read the draft, they could respond to it and submit that to the FASB through, I believe, January of 2025. The FASB has, as recently as May 7th, they had a board meeting. They received all of those comment letters, read through them, and tried to figure out if any of those comments or suggestions would change the draft language. And then ultimately, they're going to issue that final ASU expected here in the third quarter of 2025. So that at that point, it'll be a final standard, and then we can actually train on what that final standard says. So the next two slides are going to look at these proposed changes, what might change. So first, the FASB is only looking to make changes for internal use software, not software that is going to be sold. I was hoping they would try to tackle both sections at once, but that seemed to be too big a task, and it sounds like they might pick back up with software to be sold at a later date. But for now, if you're a technology company developing software out there, you just have to sit tight. There aren't any changes for you quite yet. However, if you are a company looking to implement an ERP or other software or overhaul your website in the next few years, the changes that we're going to look at very briefly here, those will affect you. It's internal use software. And again, everything at this point is just proposed. Nothing is finalized, but they do seem to be aiming for an effective date of periods beginning after December 15th, 2027. That's for non-public companies. So if you're a calendar year end, you'd be looking at 2028 implementation. Most likely they'll allow for early adoption. And since most of the changes here are just going to simplify things, I would imagine we'll have a lot of early adopters on this one. So the big change in this proposed ASU is getting rid of all references to the phases that Dan talked about in his earlier slides. Instead, now you're going to expense costs up until the point where both of these criteria are met in orange here. So both of these have to be met before you start capitalizing those costs. One, management has authorized and committed to funding the project. And two, you've met the probable to complete recognition threshold. And that probable to complete threshold would basically say if there is a significant uncertainty around the project, then you haven't met this threshold. And from what I've been able to read, different people commenting on this proposed ASU, it seems like most people are expecting that probable to complete threshold to be relatively high, maybe around a 75% certainty that they will complete the project. And they think that's a pretty high bar, which will actually result in delaying capitalization of software costs. Or to put it another way, most people think that this ASU will result in a greater portion of your ERP costs being expensed rather than, or over what the current GAAP would show. So again, to summarize, this change will expense things quicker when it comes to software implementation. So before we move on to the next polling question, I do want to do just a very quick high-level summary of this GAAP portion that Dan and I have covered thus far. So if I could summarize what Dan said, or Dan, correct me if I'm wrong here, your main point is current GAAP is confusing and a bit antiquated, right? My section could be summarized as these proposed changes would most likely lead to more of your software project costs going to the P&L right away instead of onto the balance sheet. That's the expectation. So we'll go ahead and move on to the next polling question. Polling question number 3. What is your initial reaction to the FASB's proposed changes for software costs? Are you excited for the simplified approach? Are you thinking it does not go far enough? Or are you still confused what the FASB is? So we'll see what your responses are. Dan, I'll check in with you. How would you answer this question? What's your reaction to the proposed changes?
Hard not to be excited for this new approach. I look back to the days where I would be a staff, testing, some of these expenses and looking at, all right, well, what phase are we in? And now we can kind of easily say, oh, cool. Did it meet these 2 thresholds? I think we're good and we can kind of move on there. Yeah, just hard not to be excited about this.
Well, I can be the Debbie Downer here. I would have said B. It doesn't go far enough. I was hoping they would tackle more. Let's see, most people agree with you. 76% of people are excited. It certainly does simplify some things. It does provide some clarity. I was hoping they would tackle software to be sold. I was hoping it'd be all in one big, beautiful standard change, but it was not. And then I also think they were trying to get rid of the gray area here in the old GAAP standards, but I think they introduced some more uncertainty, some more gray with this probable to complete threshold. It's going to be a lot of subjectivity, not as black and white as I was hoping it would be. But
you got to be excited about the progress of it, though.
There is progress, yeah. All right, we'll turn it over to Pat and Katie now.
All right. Thank you, guys. All right, well, appreciate everybody joining us this afternoon. So for those of you who may not be aware of who Cargas is, wanted to just share a little bit of information. And for those of you who do, you are always welcome down to our wonderful building in Lancaster. So we are an employee-owned software company in beautiful downtown Lancaster. We've been in business for 37 years as of next month. Can't even believe it. But we represent products in ERP, CRM, while also having a full team of developers on staff and our own proprietary software for the residential fuel industry. So we not only resell software, but we also implement it and help you guys evolve your system as your needs change and grow. So Pat and I have the pleasure of assisting many customers along migration exploration. So let's get into talking about what we're seeing in the market, especially as it relates to AI and automation. So next slide, please. Okay. So the pace of change in business is faster than ever. I know everybody knows that, but teams are being asked to move quicker, do more with less, and still somehow find time for big picture thinking. I was reading an article the other day about Microsoft, and it said 64% of employees feel that they don't have time for innovation or strategic work. That really stuck with me. I think we've all felt that, and we're constantly catching up instead of moving forward. And it's not because people aren't doing their jobs. I'm not saying that by any means, but it's because the systems they're using haven't evolved with the way they actually work now. That's where ERP modernization comes in. And I don't mean fancy tech just for the sake of it. I mean tools that truly help your team thrive. The right system removes friction, gives time back, and helps people focus on work that actually matters. That is what we are aiming for. Next slide. I was talking to a coworker just the other day, and she said something that really stuck with me. She said, AI is kind of like the smartphone. So if you think about it, when smartphones came out in the early 2000s, maybe some of you remember it, maybe some of you were alive. I know I was, but people weren't sure about them. We already had our flip phones, we had email. What would we need something else for? But now most of us can't imagine working without one. It's completely changed how we live and how we work. And that same shift is what's happening with AI, especially inside ERP systems. It's already here, and it's already helping teams work smarter and faster. I read in that same Microsoft article that about 70% of employees said they would happily hand off as much work as possible to AI. People are ready, and ERP platforms today are stepping up. They're automating approvals, forecasting cash flow, flagging risks, and surfacing insights that help teams make better decisions quicker. What really matters is choosing a system that keeps evolving, one that grows with your business and helps you stay ahead. Because the smartest platforms are not just solving problems today, they are setting you up for whatever comes next. Next slide. This is where it all comes together. So when you guys are evaluating ERP systems, it's easy to get caught up in features or pricing or what solves the problem right in front of you. But the truth is, ERP isn't something you want to revisit every few years. It's a long-term decision. You want a system that is not just working for you today, but one that's going to keep working and getting better as the years pass. One that grows alongside your business and helps you stay ahead of whatever's next. Because AI is not slowing down. Automation is only getting more powerful, and the ERP you choose should be ready for that. The best platforms aren't static. They evolve, they adapt, and they partner with you. So we've talked about how the way we work is changing and how AI is already reshaping the ERP world and why it's so important to choose a platform that can evolve with your business. Now let's bring that to life. Pat's going to walk you through how AI and machine learning will actually work inside the modern ERP system a little bit in a few more slides. And that way you guys can really get a taste for it. Next slide. But before we get into that, I want to give you guys a little bit more insight as you guys are considering or know somebody who's considering an ERP migration. So Cargas specifically takes two different types of implementation approaches when it comes to our ERP and CRM projects, as well as our custom and proprietary software. We look at focusing on a train the trainer or an iterative approach. Specifically talking about taking the train the trainer method, it allows for end users to truly be trained throughout the entire implementation and beyond. That approach creates power users in the system, that those power users can then train end users of the system and so forth in the future. We also are focused on building additional training into our implementation to ensure project success, and then offer additional support through our care plans to fit each customer's specific needs and use cases. So when you're thinking about taking the leap to a new ERP system, you can't just think about the products. You must also think about the partner who is going to set you up for success from day one. So, all right, let's walk through some of your favorite tips and tricks for a smooth ERP implementation. First, executives and leadership need to be the ones driving this change. If the top isn't engaged, it is really hard to get the rest of the organization to follow. I can say that from experience. Next, make sure you have a dedicated project manager or point person. This cannot be a side project. You need someone who can stay focused and involved from start to finish. Third, get the right people in the room. You want folks who understand the day-to-day and can actually make decisions when it counts. This is so important. And then, of course, that leads to the foundation. Take the time to define your goals and processes. That upfront phase is about 30% of the entire project, and it truly sets the tone for everything that follows. And finally, test the system, then test it again, and maybe test it one more time just to be sure. You do not want go live, I should say, to be the first time your team is using it. Get feedback early, walk through the workflows and approvals. Make sure it makes sense for your end users. If you stay focused, keep distractions to a minimum, and involve your team throughout, you will avoid scope creep, reduce costs, turnover, and set yourself up for success. Next slide. All right, Pat, all you, bud.
All right, Katie, thank you for that intro. You made some really key points in there to the audience about technology and the evolution, and that it's not slowing down. It's a pretty fast-moving train that people need to get on, or in some cases, you risk being left behind. And we're going to talk a little bit about some real-time use cases of AI. Manufacturing, and I realized when I put this slide in here that manufacturing, I probably shouldn't have said manufacturing, but I'm a manufacturing guy. I've been working with manufacturing and ERP systems for the last 40 years. And so that's some pretty low-hanging fruit there in the AI area for manufacturing, and a lot that you may have heard about, depending on the industry involved. I mean, if we're talking about the automotive industry, everyone's seen the videos of all the robotics going on. And yeah, that is AI. But behind that scene, all the fun stuff of watching the robots put stuff together, there's opportunities for other areas for AI to make a difference. And not just the manufacturing industry, but supply chain, financial services, nonprofit, even can benefit from that. Professional services. But on the manufacturing side, some of the behind the scenes things like predictive maintenance. So every manufacturing plant has machines that need to be maintained on a regular basis. AI has now stepped into the EPM world and is offering a lot of insights into predictive maintenance whether it's what needs to be fixed, when does it need to be fixed, the frequency that we need to inspect, and things like that are all being driven now by really robust EPM systems that have AI and machine learning at the heart of them. We talked about the AI-driven robotics, digital twins, where a manufacturing company can model a workflow in the plant, create a twin of that, and be able to have multiple scenarios going on where they can tweak one or tweak the other and see what the impact is on that, all with AI. AI is in product design. So anyone who's using any kind of CAD systems or things like that, all the systems today have AI built in. There is supply chain automation and optimization that is going on, and even a little bit away from the AI, from some of the generative AI we see for manufacturing, some of the AI agents, and I'm going to show you an example of this today, are starting to make their way in. We've all heard of chatbots and things like that. Yeah, that's making its way into ERP today. And the pace of the technology evolving with this is incredible. And I'd be remiss if I didn't talk a little bit about the journey of how we got to where we are today. I can remember, over my 40 plus years in ERP, walking into a data center that's the size of someone's house and with subfloors and its own air conditioning and climate systems and things like that, where it was just filled with racks and racks of computers that if you totaled it all up, my smartphone today, my iPhone today has more processing power than what that mainframe did. Things have evolved. We've evolved from that on-prem mainframe to the client server back in the late 1990s, early 2000s, to hosted systems, and now finally we're in the cloud era. The cloud computing area is what has offered the growth of AI and machine learning in ERP today. The processing power that you get from being in the cloud is just unbelievable, and it's fueled this this complete generation of ERP software that's now including AI and machine learning in the base software. And we're going to take a little bit of a look at that today. So if we can go to the next slide, please. I want to talk about some of the AI and machine learning components that come out of the box I'm going to use a Microsoft ERP as an example. This is a product from Microsoft called Dynamics 365 Business Central. It's one of two ERP products from Microsoft. And I have worked, before I came to Cargas, I did work at Microsoft for almost 15 years. And I was there for the beginning of their cloud development for ERP. And with Dynamics 365, I'm going to talk about a small mid-market ERP with Business Central, but Microsoft also has enterprise level as well, has the same AI built into it. But I want to show you a little bit about what comes out of the box with if you're entertaining a new ERP. What are some of the things that maybe you might want to think about having, or things that you would expect that would be there? And I want to give you a little bit of a vision into that. And if we go to the next slide. A little bit away from the manufacturing side. So we saw some of the different areas with predictive maintenance, QC, all those kind of things on the manufacturing side, but other areas of the business can benefit as well. Customer service. It's such a highly competitive business landscape that everyone's looking for that advantage. How can we better manage inventory to service our customers better? How can we improve order fill rates to, again, continue to enhance our customer service and basically making our customers happy? We want to be able to anticipate business challenges. So that might be with, forecasting and maybe even predicting when payments are going to be late. Yeah, we can do that in ERP with AI and machine learning and set up algorithms that will predict which customers are going to pay which invoices late. That's just one of the benefits in there. And again, enhanced decision making comes into play here too. maybe that comes into play if you're working with cash flow forecasting and you want to do some cash flow analysis. Yeah, Microsoft has put AI at the forefront of cash flow forecasting. So these are all different areas, some with manufacturing, some apart from manufacturing. But what we're noticing today in many of the companies that we're dealing with, if they're a manufacturer, they're also selling what they make. They've got finance departments in their company. So this is one big happy family here, all sharing the data that's being delivered across the enterprise. And if we go to the next slide, I'm going to take you through a little demo here of Business Central, and I want to point out some of the features that come out of the box with a modern ERP. So bear with me here. I'm going to share my screen, and hopefully everyone, if I can get a confirmation that you're seeing.
We see it, Pat.
All righty then. An ERP system on your screen. This is Microsoft Dynamics 365 Business Central. It's an all-up ERP. It handles multiple different industries. So if you're in manufacturing and supply chain, yeah, Business Central is going to be a great fit for your company. If you're in professional services, or you're in project-related business, yeah, Business Central is a great one for you. Even if you were a nonprofit. Katie, how many nonprofits have we done in the last year?
Oh, Pat, I think you became an expert on it.
Hey, I'm a manufacturing guy, but yeah, we do. We definitely have our share of nonprofits that we do, all with the same software. So again, these features go across the functional areas within ERP. So one of the things I want to start is just to give you an idea of what is out of the box with AI-driven functionality in this Business Central package, ERP package. So we have things in here like chat, where you can ask the system any question about your data at any time, and it will come back with AI-driven results based on your ERP data. We can take a list. Maybe it's a list of posted GL transactions, and we tell that list, hey, I want you to transform this list, summarize it by department and cost center, and while I'm telling the system this or typing it in, the list is being reformatted on my screen in front of me to give me exactly how I want to be able to look at this data. I could be in a customer, in a vendor, in a purchase order, or an item, etc., or a GL account, and say, summarize all the data for this entity for me. So if I'm in an item, it'll tell me how many production orders that item is on. If it's a component of a manufactured item, all the different orders where that component is being called in. How many sales orders have that item? What customers are buying this item, etc. We're going to see a thing where I'm going to show you a sales order agent. So if you think about chatbots and things like that, this is kind of like a bot, but it's in there and it's reading your emails, looking for sales related emails, looking for someone who's sending you a buy signal. And when it gets that email, it'll turn it into a quote or an order for you. There's e-documents, and creating product information. So I'm going to show you a couple examples here of demos with this. And if you bear with me here, even down here, some of the other things that are available, bank account reconciliations. Yeah, AI can now assist you in reconciling your bank accounts, as well as providing marketing support for your items that you have, and using AI to generate unbelievable product descriptions that you can use if you're selling via e-commerce or Shopify or whatever method you're using to sell, or even on your own website to describe what you're selling. AI can help you with that. So without further ado, A couple things I want to get into here is, and let's start off with the sales order agent. So I've got email here, and I would have had just a bunch of emails come in, and I see here, oh, there's some people who are looking to buy something here. Oh, there's one. Yeah, they want to buy 20 pieces of this guest chair in yellow that we sell, and item number 1936. If I go back to Business Central, I've got this little sales order agent icon up here at the top. Now, this is in preview, so I just want to say, I have it turned on, but it's in a preview mode. This just released from Microsoft, and it's telling me it's analyzed 38 emails. It's created one quote out of those 38 emails, and it saved me 2 hours of time in reviewing my email and actually entering an order with that. That's great information. So let's review what it has done. And it's kicked out a lot that are, from Microsoft security or whatever, that just are not relevant. They're not sales related. But if I scroll down here, I do have one here from Pat Bostick. We can read the email inside the ERP, and it's saying, hey, we want to buy 20 of these chairs. Perfect. That's great. Typically, I would take that email, maybe move it to another screen, go back into the sales order entry screen in my ERP and type this information in. But with Copilot or Microsoft AI, that's done for me already. So the next step here is it's created and populated a sales quote for me based on that email. It's read through the body of the email. It knows the dates, it knows the quantities, it knows the product description and the item number, and it's actually filled in all that information. Here's the quote header. It recognized the customer from the email address. It's populated the sales line item on the quote or the sales order form, and it recognized that they want to buy a quantity of 20. That's perfect. It's already created that for me. And then if I click the next step, it's gonna actually send an email response to my customer, recognizing the amount of the quote, and attach a copy of the quote to the email. That is all done via AI. It's constantly looking at my email. And if I go in and I take a look at the sales quotes, there's the quote right there that it just created for a quantity of 20. Now, if I'm good with that, I can just click make order, and I've created a sales order without ever needing to key in a customer or an item or a quantity. And it will check item availability as well. So that's one of the great features that are in there with Copilot. And I'm going to use Copilot and AI interchangeably, so I just don't want to get you confused. Another area that AI is in, we talked about the bank accounts with bank account reconciliation with AI. But one of the areas that I really like is, and we'll go to the item side here. And what I'm going to do is I'm going to pick that yellow guest chair right here, and I'm going to click on it so I can get into the detail of that order. And as you can see here, I've got all the things that would be in an item record, inventory, costing, pricing, and things like that. But over here in this little task pane, I've got a summary feature here. Let's use AI to gather valuable insights about the data. So I'm going to start summarizing with AI. And while I'm doing that, I'm going to scroll down here to this marketing text. So I've got this Berlin guest chair. It's yellow. If I look at some of the product attributes, I can see the depth, width, the height, the material description is made out of cotton, the model year, all those different things that come into play. What I don't really have is a catchy marketing kind of text to sell this item rather than Berlin guest chair. So let's go in and draft a marketing level text description with Copilot. So this has come in, it's saying, okay, sit in style with the Berlin guest chair, introducing the guest chair, striking yellow hue. Hey, that all sounds great. Not really what I'm looking for. You know, I want this to be a little bit more creative rather than inspiring. So let's regenerate it. And again, it's using what it already has from the description. It's using things from the item attributes in here, pulling it all in into a marketing level description that I can now, if I'm selling on Shopify or I'm selling on, you know, any of my e-commerce sites, this automatically flows up to those sites so that my end customers can see this great description of this product. Okay. Now we'll keep that. So now that is there, ready to be utilized. Now, if I go back up to the summary and we started the summary, it's telling me that this item is definitely not blocked for sales or purchasing. So you can block an item from being bought or sold. Tells me about the standard cost, what my profitability percentage is. If I click more on here, it's going to show me, you know, it's got 50 units have been sold. If I click on the 50 units, it takes me right into the detail of, I can get right to the detail of who bought these 50 units. If I had them on any production orders, or if it was a product that that I'm buying, it would show production orders and POs and list them right here for me, so that I don't have to go hunting and pecking for any kind of information. And if I want more information on it, it even brings up the Copilot chat where I could say, you know, I won't do it now because I know we're running short on time. But if I say, show me all sales orders with Berlin guest chair, I'll get a list on my screen of every live sales order that I can click into and look at all the detail for that with AI. And then finally, AI and machine learning are great for generative content and things like that. But one of the areas where AI is really coming into play is on the data analysis areas of your business. And with Business Central being a Microsoft product, there are just a ton of reports and things like that I just want to give you a little bit of an idea. I don't know if anyone's heard of Power BI or not, but Power BI is part of Microsoft Dynamics 365, and it's built right into Business Central. And Microsoft has created, about close to 100 reports now, just on Power BI alone across all the functional areas. So if for instance, I want to see under manufacturing, let's take a look at some of the Power BI reports that are there for consumption variance, as an example. And so it's launching Power BI with this nice analytical report for me that, again, this is all live data. And as I click on the data, you can see the different, things change, and it's all very live here. I have filters that I can, if they're built into the report, different filters, and how I can limit the data that I'm looking for, and basically just different ways to slice and dice. But this is very much a part of machine learning, artificial intelligence, and all these capabilities are built in even into the Power BI tool, which is your main reporting tool within Microsoft Dynamics. So again, AI built into the core platform. It's evolving. With Microsoft, we have 2 releases a year. Every release is seeing new additions of AI and machine learning content that are coming in the core product. So with that, I hope I gave you a little bit of an idea of how modern ERP systems are utilizing the power of AI. Thank you.
And just to add to that even, Microsoft is, as you're seeing in what Pat had showed you, so above and beyond some of the other ERP softwares out there that some of those other ERP softwares have actually incorporated Microsoft's Copilot into their software because it is so strong and powerful. So very interesting, but also how quickly it is consistently evolving.
Excellent. Let's go into our fourth polling question here, the last polling question of the day. When do you expect to implement the next ERP at your company? Within the next year, within the next 2 to 4 years, 5 years plus, or not applicable? You're not going to implement an ERP. A question here for Pat and Katie. How often do you typically suggest a company revisit their ERP or consider a major upgrade? Is it based on the time that has transpired or the growth changes within the company? What would trigger them to look at ERP again?
Well, Katie, I'll start off. Typically what it's going to be is end of life for the current ERP, where it's not going to be supported by the author for, anymore. All ERPs have end of life at some point. The other area might be you've just outgrown it, and you're looking for growth areas and mergers and acquisitions, and your current system doesn't handle a good international multi-company environment. Time to look for a new ERP.
And I'll also add one. It's not one that anybody would ever like to admit, but some of them have had a bad experience. Software may not have been set up properly in the first place. So we do get a bunch of those that we're speaking to as well. And it's, again, something that puts you into a situation of reevaluating what is the best path forward and what software will meet your needs.
Correct.
Great. So we have the results there. Most are saying NA. Got to think a lot of those folks are from the McKonly and Asbury team filling this out. But we have a good distribution there in the next 5 or so years.
Mm-hmm.
Great. All right, so we still have a couple minutes here. We can give some time if anyone has any questions. Again, you can put in the chat box and we will do our best to address them. I guess one question while we wait a minute or two here, question for Katie and Pat. What are some things or some questions that a company should be asking a software partner when they're going through the evaluation process?
Yeah, I'll take a couple of those, and Pat, you can add to it. But I think one of the biggest things that I can recommend is asking them who's going to be doing the implementation. There's all different softwares out there, and some are done directly through a direct sales team, some and the implementation team, some are also offshored. So understanding who is going to be there for implementation, but also ongoing support. So I think that's one of the ones to always think about and make sure that you're asking. Another one is, let's talk about the price. So is what I'm seeing today going to be the same in 5 years? What is going to change? We understand, as Pat has already shared, with Microsoft, they have new releases. Does those new releases constitute an annual increase then in the rate? So understanding that is always something to ask as well. Pat, is there any you want to also add?
Yeah, I might add in there too that you want to look for not only the solution that's your industry, but that the partner that you're looking at understands your industry as well. You're investing a ton in a new ERP, and you're looking for that not only for just satisfying current business needs, but maybe you're also looking for process change and best practice, things like that. You want to make sure that the company you're working with understands the industry that you're in.
Yeah, that's great. Thank you both. All right, so we'll move to closing here. I want to thank you for joining us for today's webinar. If you do have any further questions regarding today's presentation, please feel free to reach out. Our team would be happy to assist. A recording of today's presentation will be posted on our website and social media sites within the next few days. And for those of you who requested CPE and answered the polling questions, those certificates will be sent out within the next month. Upcoming events, registration is open for our next webinar on June 12th, which is the first webinar in our 3-part Affordable Housing Summer Series, tailored specifically for nonprofit and for-profit developers and their finance teams, offering practical guidance on key accounting and reporting issues that impact operations, compliance, and long-term sustainability. Registration is open for the second of the 3-part Affordable Housing webinar series, taking place on July 10th. That webinar will provide a basic understanding of the Federal Home Loan Bank of Pittsburgh's AHP program, while focusing on long-term monitoring processes and nuances related to low-income housing tax credit, LIHTC projects. So thanks again for joining us today, and I hope you enjoy the rest of your day.